D. Serve as an internal trusted advisor and consultant. Treasury professionals serve as internal trusted advisors by providing financial expertise, strategic guidance, and risk management support across the organization. Beyond managing liquidity and financial operations, Treasury teams contribute to decision-making processes that influence capital structure, investments, working capital, mergers, financing strategies, and operational planning. Organizations rely on Treasury professionals to interpret financial information, evaluate market conditions, and recommend solutions that align with corporate objectives. Trusted advisors must understand both financial principles and broader business operations to provide practical and informed recommendations. Treasury professionals collaborate closely with executive leadership and functional departments to improve organizational performance, manage financial risk, and support long-term strategic planning. Effective advisory relationships strengthen communication, decision quality, and organizational financial stability. Building credibility as a trusted advisor requires Treasury professionals to demonstrate technical expertise, sound judgment, and strong communication skills. Treasury teams must provide accurate analysis, timely recommendations, and clear explanations of complex financial issues to both financial and non-financial stakeholders. Organizations often depend on Treasury professionals to explain financing alternatives, interest rate risks, foreign exchange exposures, and liquidity implications associated with strategic decisions. Treasury professionals also help management evaluate operational initiatives by analyzing financial impacts, forecasting cash flows, and identifying potential risks. Consistent delivery of reliable information and objective recommendations strengthens confidence in Treasury's advisory role. Maintaining professionalism, confidentiality, and integrity is essential for establishing long-term trust throughout the organization. Treasury professionals frequently advise internal stakeholders on liquidity management, working capital optimization, and financing decisions that support operational efficiency and strategic growth. Treasury teams collaborate with departments such as accounting, procurement, operations, tax, legal, investor relations, and financial planning to align financial strategies with business objectives. For example, Treasury may recommend payment timing strategies to improve cash flow, evaluate financing options for capital projects, or advise procurement teams regarding supplier payment structures. Treasury professionals also provide guidance regarding banking relationships, investment strategies, and risk mitigation techniques. Cross-functional collaboration improves organizational coordination and helps ensure financial decisions support broader operational and strategic priorities while maintaining appropriate liquidity and risk management standards. Risk management consulting is another important advisory function performed by Treasury professionals because organizations face financial risks related to interest rates, foreign exchange, credit exposure, cybersecurity, and market volatility. Treasury professionals help management identify, measure, and mitigate these risks by recommending appropriate policies, hedging strategies, internal controls, and operational safeguards. Treasury teams may conduct scenario analysis, liquidity stress testing, and financial modeling to support informed decision-making during uncertain market conditions. Effective advisory support allows organizations to evaluate potential financial outcomes and prepare for changing economic environments. Treasury professionals also assist in developing contingency funding plans and business continuity strategies that strengthen organizational resilience during operational disruptions or financial market instability. Technology and data analysis capabilities have enhanced the Treasury function's role as an internal consultant by improving access to real-time financial information and operational insights. Treasury management systems, enterprise resource planning platforms, and financial analytics tools provide Treasury professionals with detailed visibility into cash positions, transaction activity, debt obligations, and market exposures. Treasury teams use these technologies to prepare forecasts, identify trends, evaluate operational performance, and support strategic recommendations. Data-driven insights improve decision quality and allow Treasury professionals to communicate financial implications more effectively to senior management and business units. Strong analytical capabilities also support continuous improvement initiatives by identifying inefficiencies, reducing costs, and enhancing Treasury operational effectiveness throughout the organization. From a CTP examination perspective, candidates must understand the strategic importance of serving as an internal trusted advisor and consultant within the organization. Exam questions frequently assess the ability to evaluate financial alternatives, communicate Treasury recommendations, analyze business risks, and support cross-functional decision-making. Candidates should understand advisory responsibilities related to liquidity management, financing, working capital optimization, risk management, and financial planning. Knowledge of communication practices, financial analysis techniques, collaborative problem-solving, and strategic Treasury leadership is also important. Treasury professionals must recognize how advisory activities contribute to organizational performance, operational efficiency, and financial stability. Mastery of these concepts enables Treasury professionals to provide valuable strategic guidance and strengthen the Treasury function's role within the organization.